What if I told you that buying a home in the wrong state today could cost you tens or even hundreds of thousands of dollars over the next few years? And what if, at the very same time, another state could quietly become America's next real estate success story? Most headlines treat the U.S. housing market like it's one giant machine. But that's no longer true. America isn't experiencing one housing market anymore. It's experiencing 50 different ones. Some states are showing signs of slowing demand, rising inventories, and increasing price pressure. Others continue attracting new residents, high-paying jobs, and long-term investment. The surprising part? Many people are still making decisions based on outdated information from the pandemic housing boom. In this video, we're not just listing states. We'll explore why certain housing markets may struggle while others could continue growing, what economic signals smart investors are watching, and what these changes could mean for buyers, homeowners, and investors over the next several years. Let's begin. During 2020 and 2021, the rules of real estate seemed simple. Mortgage rates were historically low, homes sold within days, and buyers competed in bidding wars across the country. Many people believed home prices would continue climbing forever, but today's market tells a very different story. Mortgage rates have increased dramatically compared to those pandemic lows. Monthly payments are much higher. Affordability has become one of the biggest challenges in decades, and buyers are far more cautious than they were just a few years ago. Instead of asking, "How quickly can I buy?" many families are asking, "Can I even afford to buy at all?" That single shift has completely changed the housing market. Let's start with the states facing the greatest downside risk. The first state is Florida. At first glance, Florida still looks unstoppable. Warm weather, beautiful beaches, and no state income tax continue attracting new residents. But beneath the surface, several warning signs are beginning to appear. In many cities, inventory has risen significantly compared to the pandemic years. Buyers now have far more options, reducing the urgency that once drove prices sharply higher. Insurance premiums have increased dramatically in many coastal regions. Property taxes remain elevated in some markets, and higher mortgage rates have reduced affordability. These factors don't automatically mean prices will collapse statewide, but they create conditions where sellers may need to lower expectations, especially in markets that experienced explosive appreciation during the boom. Next comes Texas. Texas remains one of America's strongest economies, but its housing market is entering a different phase. One major reason is supply. Builders responded aggressively to pandemic demand by constructing thousands of new homes. Now many buyers have more choices than at any point in recent years. When inventory expands while demand slows, prices naturally face pressure. Austin has already demonstrated how quickly an overheated market can cool once affordability becomes stretched. Other fast-growing Texas cities are being watched closely for similar trends. The third state is Arizona. Phoenix became one of America's hottest relocation destinations during the remote work era. Home values climbed at an extraordinary pace as buyers flooded into the market. But markets that rise rapidly often become vulnerable when conditions change. Higher borrowing costs have reduced purchasing power. Investors have become more selective, and buyers now negotiate far more aggressively than they could just 2 years ago. Instead of bidding wars, many sellers are offering concessions to attract buyers. Fourth is Nevada. Las Vegas has always experienced larger housing cycles than many other U.S. cities. Its economy depends heavily on tourism, entertainment, hospitality, and consumer spending. During periods of economic uncertainty, those industries often slow before others. Combined with higher financing costs and moderating migration, Nevada could experience continued price softness if demand weakens further. The fifth state is Idaho. Few places experienced a stronger pandemic housing boom than Idaho. Cities like Boise attracted thousands of new residents, escaping expensive coastal markets. Home prices surged at remarkable speed. But once migration slowed and financing costs increased, demand naturally cooled. Markets that experience the fastest growth often require time to stabilize, making Idaho one of the states many analysts continue watching closely. Now let's look at where the opportunities may be developing. The first state is North Carolina. Unlike markets driven mainly by speculation, North Carolina benefits from strong economic fundamentals. Technology companies, healthcare employers, Financial firms, research institutions, and manufacturing investments continue creating new jobs across the state. Population growth remains healthy, supporting steady, long-term housing demand even during slower national markets. Next is Tennessee. Nashville has evolved into one of America's fastest-growing business centers. Healthcare, logistics, entertainment, and technology continue expanding across the state. Combined with favorable tax policies and consistent migration, Tennessee remains attractive to both businesses and families, searching for better affordability and career opportunities. Third is South Carolina. Charleston, Greenville, and several surrounding communities continue attracting retirees, remote workers, and expanding businesses. Compared with many higher-cost coastal states, South Carolina still offers relatively attractive housing affordability. As long as job growth and migration remain steady, housing demand could continue supporting prices. Fourth is Georgia. Atlanta has transformed into one of America's largest economic engines. Technology firms, film production, logistics companies, healthcare systems, financial institutions, and major corporate headquarters continue expanding across the region. Unlike housing booms fueled primarily by speculation, Georgia benefits from genuine employment growth, which often creates healthier, long-term housing demand. Finally comes Virginia, especially Northern Virginia. Few regions enjoy the employment stability created by federal government agencies, defense contractors, cybersecurity firms, and one of the world's largest concentrations of data centers. Even when the broader economy slows, these industries often continue generating strong demand for housing. While affordability remains a challenge, stable employment may help support home values over time. But here's something many people misunderstand. Housing prices don't simply rise because people want homes. They rise when demand grows faster than supply. When inventory expands, mortgage costs increase, or migration slows, even previously hot markets can cool surprisingly quickly. On the other hand, states creating new jobs, attracting businesses, improving infrastructure, and adding population often maintain stronger housing demand for years. Another mistake many buyers make is assuming every city inside a booming state will perform equally well. That's rarely true. One neighborhood may struggle, while another just 20 minutes away continues appreciating because of stronger schools, better infrastructure, or growing employment centers. Real estate has always been local, and that's becoming even more important today. So, what does all of this mean if you're thinking about buying a home? Instead of asking whether prices will rise or fall next month, ask better questions. Is the local economy creating jobs? Are more people moving into the area than leaving? Is housing supply increasing rapidly? Can you comfortably afford the monthly payment even if interest rates remain elevated? Those questions often matter far more than trying to perfectly predict short-term price movements. For homeowners, this market requires patience. During the pandemic, almost every listing attracted multiple offers. Today's buyers negotiate harder, compare more options, and expect better value. Sellers who understand current market conditions and price realistically are generally in a much stronger position than those hoping for 2021 prices. The biggest lesson from today's housing market is simple. America is no longer moving in one direction. Instead, each state, and often each city, is writing its own real estate story. Some markets may experience meaningful corrections before finding balance again. Others may continue benefiting from strong economies, population growth, and long-term investment. The smartest buyers won't follow hype. They'll follow data. They'll study local trends instead of national headlines. And they'll understand that in real estate, where you buy often matters just as much as when you buy. As the housing market continues evolving, one thing is becoming increasingly clear. The biggest opportunities and the biggest risks won't be spread evenly across America. They'll belong to those who recognize the difference before everyone else does.